Welcome to the Riskwiser Zone, the podcast where we help you navigate the ever-changing landscape of stocks and finance. I'm your host, Lua, and I'm glad you're joining us today. As we always say, the only constant is change, and that's especially true in the world of finance. Well, it's been an interesting morning so far, with mixed signals from global markets. The Indian market is expected to consolidate, mirroring these mixed cues. But before we dive into that story, let's talk about something that's been making headlines: the derivatives market. You may have heard about the manipulation allegations and trading bans in the news recently. Today, we learned that Jane Street has deposited a significant amount of money into an escrow account related to these allegations. This is a developing story, and we'll be keeping a close eye on it. As always, we want to remind our listeners that manipulation and unfair practices have no place in our markets. Now, let's move on to some trading ideas for the day. Our friends at Economic Times have put together a list of stocks to buy or sell today, including Biocon, Voltus, and Ambuja Siemens. These are just a few examples, but it's essential to do your own research and consult with a financial advisor before making any investment decisions. As we always say on this show, a correction is not a bear market. And that's especially true when you look at the broader trading range in between 24,600 to 25,600 zone. Of course, there are some hurdles to watch out for, but that's all part of the game. So, where do we go from here? Well, as the great investor once said, the stock market is a device for transferring money from the impatient to the patient. So, let's take a deep breath and stay focused on our long-term goals. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Stay tuned! Welcome back to the Riskwiser Zone. I'm your host, Louie, and we're delighted to have you rejoin us after that brief break. As we dive into the middle segment of our show, we'll be taking a closer look at the world of initial public offerings. It's an exciting space, with new companies listing on the markets, offering investors opportunities for growth and diversification. Today, we're focusing on two IPOs that have caught our attention: SmartWorks Co-working Spaces and Spunweb Nonwoven. Both of these companies are operating in distinct industries, but they share a common goal: to raise capital through public markets and take their businesses to the next level. Let's start with SmartWorks Co-working Spaces. This company has been making waves in the co-working industry, providing flexible and innovative workspaces for businesses and entrepreneurs. Their IPO has seen significant interest, with the issue subscribed multiple times on the first day of bidding. The gray market premium is also looking robust, indicating a potential listing gain of around 26%. This is certainly an encouraging sign for investors who have applied for shares in this IPO. On the other hand, we have Spunweb Nonwoven, a company that specializes in producing nonwoven fabric used in various sectors such as hygiene, medical, packaging, agriculture, and construction. Their IPO has also garnered strong demand, with the issue subscribed 7.61 times on the first day of bidding. The GMP for this IPO is looking healthy as well, with expectations of a listing gain of around 26% to 30%. It's essential to note that while these numbers are promising, investors should always conduct their own research and due diligence before making any investment decisions. IPOs can be volatile, and market sentiment can shift quickly. As we analyze these two IPOs, it's clear that both companies have strong growth potential and are operating in industries with significant demand. However, it's crucial for investors to consider factors such as valuation, financial performance, and industry trends before investing. In conclusion, the IPO market is always exciting, with new opportunities emerging regularly. As investors, it's essential to stay informed and adapt to changing market conditions. We'll continue to monitor these IPO and provide updates on their progress. Stay tuned for our final story of the day: right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're wrapping up today's show with a look at the ongoing trade tensions between the US and the EU. As we've been following, the situation is becoming increasingly complex, with both sides digging in their heels. The latest development has the EU warning that a 30% tariff on its goods would be almost impossible to continue trading as usual. This comes as the US is seeking to address its trade deficit with the EU, which currently stands at $235 billion. The EU, on the other hand, is pushing back against what it sees as unfair tariffs and is preparing retaliatory measures. Now, we've seen some analysis suggesting that a 30% tariff could shave off around 0.7 percentage points from Eurozone output, which would likely lead to further monetary policy easing from the European Central Bank. This, in turn, could have significant implications for investors and traders. It's worth noting that the EU is also exploring ways to diversify its trade relationships and reduce its reliance on the US market. However, as we've discussed before, this is a long-term strategy that will take time to bear fruit. In the meantime, the uncertainty surrounding these trade tensions is likely to continue weighing on markets. As one observer noted, the lingering uncertainty may even push back the timing of the Federal Reserve's interest rate cut, which could have further implications for investors. So, what does this mean for you? Well, as always, it's essential to stay informed and up to date on these developments. We recommend keeping a close eye on the news and adjusting your investment strategies accordingly. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.